Hi, I'm Beth Riebensdorf with the Reeby Homes team, bringing you real estate beyond expectations and the last Phoenix market update for 2020. Let's get started. The big question right now is, are prices going up too fast? We're seeing appreciation at a level that many are asking, can we sustain this in the market? Let's start with a look at compound annual home price appreciation. Going back to 1991, we see that the average is 3.8%. Between 1991 and 2012, that 3.8 jumped to 6.1%, which is a considerable jump. Compare that to the difference from 2012 at 6.1 to today's number of 7.0. Here's a view of the 3.8% historic appreciation starting in 2000. What would happen to home values if there were no housing crash, if there was just a normal market every year? Now, obviously, that's not a reality, but it's useful to use the information to compare it. This chart takes that 3.8 historic appreciation if there were no market anomalies and lays over the actual what occurred. We can see the run-up in prices in the early 2000s, then depreciation through the housing crash, and we see that 2020, well, it outpaces historic appreciation. And the driving factor for that? Well, that's the story of inventory and increasing home prices. What's happened to both of those over the last 10 years, if you look at this graph, it shows that as the supply of homes on the market goes down, the price goes up. And that's where we stand today. Very, very limited supply across the country is causing home prices to continue to increase. Understandably, that is sparking the conversation and some fear about a bubble and the potential for a painful crash. Here's a comparison of key factors in 2006 and today. Back in 2006, prices, they were decreasing compared with today's increase in prices. There was an excess of inventory versus the record low inventory we're seeing today. Investors back then, they were not buying, and today it's a very, very high demand for investors. Rents were low back in 2006, and rents are high and still increasing in 2020. The lending environment back in 2006 was very different, with the dubious adjustable rate mortgages, loans that didn't even require any income documentation. And very different from 2006 is the high amount of equity. 90% of homeowners have at least 10% equity in their home. 42.1% have 100% equity in their home, and 86.6% they have at least 20% equity. And another big headline is the mortgage debt soaring to close to $10 trillion nationwide. Now that's obviously a big number, but it's an incomplete view. This graph from the Fed looks at the housing debt service ratio for mortgages as a percentage of disposable personal income. And you can see where we stand today is lower than where we were in the 80s, in the 90s, and certainly in the early 2000s when we peaked at over 7%. Today, we sit at 3.72% of disposable income is committed to a mortgage payment. Moving on to mortgage rates, Freddie Mac has come out with their projection of staying at about 3% for a 30-year fixed mortgage. As we compare that to 2016, 17, up to 19, definitely a favorable lending environment today and into 2021. And for projections on home sales appreciation, both the 12-month forecast and the next year 2021 forecast, if you remove the outliers and focus on the middle numbers, the experts are projecting 3 to 4% appreciation. That's less than the 7% we've seen this year. That may be due in large part to the expectation by these experts that more inventory is going to come into the market. And of course, the numbers will vary considerably when we look at the local market. So let's take a look at the Greater Phoenix market numbers. In the under $300,000 price range for the active listing count, which is available houses to purchase, this time last year there were 3,074 available. Today, only 805. That's 2,269 fewer, or 3.8 times more were available a year ago than they are today. And this time last year, the sales price per square foot was $114.48, and today it has increased to $160.94. What's also interesting to take a look at is the list price. Average list price is $159.08, but the sales price is higher at $160.94. For the $300,000 to $600,000 price range, this time last year there were 4,138 available homes, and today there are only 1,971 available. So that's 2 times more availability a year ago and 2,167 fewer available to choose from. And the sales price last year for this range, $149.63, has increased to $184.04. And the average price per square foot for the listing price is lower at $183.29 than the sales price of $184.04. In the price range of $600,000 to $1 million, this time last year there were 1,401 active listings, compared with today at 779. That's 622 fewer and 1.8 times more available last year. And the sales price per square foot this time last year was $205.76 and has increased to $230 per square foot. And for homes over $1 million this time last year, there were 1,560. Right now, there are 540 fewer, so 1,020 available to choose from. And for the price per square foot last year, the sales price was $327.22, and it has increased to $365.91 per square foot for the sales price. As we wind down 2020 and look forward to a much better 2021, we are grateful. Grateful for the uncertainty, grateful for the unknowns because of the lessons that they taught us. Grateful for teaching us to let go of the insignificant. Grateful for teaching us tolerance and patience. Grateful for teaching us creativity, resilience, tenacity. And grateful for reminding us just how very, very precious relationships and connections are. So from our family to yours, we wish you a very, very healthy and happy holiday and New Year. And we hope you have a fabulous and much improved 2021. We look forward to talking with you next year.